What's going on, guys, and welcome. It is Monday night of the 13th week of investing here, where we put $50 every day, every Monday through Friday into the stock market. Wow, I am tired. I don't know if you guys can see the bags under my eyes. Like, I haven't really had much sleep lately. I've just been so busy, so much work, like a lot, and trying to do the videos at the same time. um it's rough for sure. So anywho, trying to get through it. Luckily my investing is set up automated on Sofi, so it doesn't take too much effort on that front. But as far as like other stuff, yeah, it's just tough. But we're going to take a look at the channel tracker. We're going to take a look at our investments, where they're sitting. We finally had a couple like consecutive decent days in the market. So we'll look at that, and what was the next dividend payout. So with that, let's dive into our tracker. All right, so here we have the channel tracker on this blue line here. It is March 27th of 2023. Again, my weight, I haven't really been keeping up on it. Quite frankly, I don't have any time in my life at all right now. I like wake up, shower, and run out like straight out the door. So, they're not really healthy to be doing that. I got these bags like Birkins under my eyes right now, so that's not ideal, but haven't been keeping up on that at all. Investment balance. So we're at $3,319.27. So that's good. Dividends earned. We got about $1.50, so that's sweet. $13.86 is now our total dividend earned. We'll take a look at where that came from in a minute. Total growth, we are down $245.12. So yes, I understand we're down. That's not great, but it means we're buying stuff on the cheap, and it's kind of stabilizing out, which is good. Total YouTube income, $100. That was from Sofi referrals. Guys, if you want to sign up for Sofi, they give you free stuff when you set up a new account for the first time. I'll have a link down below in the description. For the first $10 you put into a new investing account, they will give you $25 of free stock. So it's actually pretty solid ROI if you guys want to get into investing with $10. Not a bad place to start. That is my opinion, by the way. I am not a wealth manager, credit counselor, or financial advisor. I'm just a guy vlogging in a triangle-shaped room. With that, total subscribers. All right, so total subscribers are up to 1,709. Guys, thank you for all the latest subscribers. I do appreciate it. Welcome. Total views, we're up to 172,121 total views. So good to see that back growing. If we can pick up 1,000 views about every day, every couple days, or 2,000 views every day, that'd be sweet. And then watch hours. This is what we're really working on, or where I can't wait to see it grow. So we're at 3,584.8 watch hours. Again, once that hits 4,000, guys, we're qualified for monetization. So that's where we start seeing the actual YouTube income. I put a lot of hours, a lot of time into this. My goal is not to necessarily do this for profit. It's to keep myself accountable. Hopefully you guys find it motivating as well to see that like you can amass $3,000, $3,500 an account in a couple months. So that's why I'm doing it. If I got something monetarily out of it, oh, that'd be so good. It's just so much more motivating when like you get paid. Even though I like doing it for why I do it, like on a day like today where I just want to be asleep. Even though I want to be asleep, I'm making the videos anyway. But yeah, if I was getting paid, it'd be much better. Anywho, so let's take a look at, Seeking Alpha. We'll take a check-in at the beginning of the week, and then I want to see where those dividend payments came out from, because that is why we are here, to build a portfolio that pays us without ever having to sell our positions. All right, so this is actually on the Sofi app, where they're showing our total orders And this is that $1.55 that we picked up from BlackRock. So BlackRock paid out its dividend. That posted on Friday. It just didn't show in the video, so I missed it, or I just missed it, but I don't think I did. So Friday, being a business week, showed up today, so that's pretty cool. BlackRock paid $1.55. That's really good for being, a quarterly paying stock that we had been buying for like a quarter, or not even. But here's Seeking Alpha. This is basically everything that we have, and I have it listed here by payout date for dividends, so we can see what's upcoming next. And SCHD, we have SCHD paying today, which means that should show up tomorrow. So that's pretty exciting. We have 8.11 shares. They took the snapshot about a week ago, so that means we had probably 7.5 or so. And then what was their dividend again? Let's see what they're paying out. So 60 cents per share. That's going to be a good little payout. 7.5 times 0.6. That's going to be $4.50 dividends, roughly. Give or take. So that's pretty sweet. And then let's go back to pay through. Right after, we'll have NASDAQ finally paying that dividend that I've just been waiting for, so I can sell it. And then Pepsi following up after that. That's a dividend that's a little more exciting. Because we want to keep Pepsi, so that's a good thing. But yeah, a couple dividends coming up soon. Now, as far as year-to-date performance, a lot of people are in a similar situation to this. Year-to-date, we're looking at JEPQ leading the way at 8.5%. This is something that I've definitely been a fan of. I know a lot of people are a fan of JEPI. These are both JP Morgan's equity premium income ETFs. The difference between JEPQ and JEPI is that JEPI is a little more broader of the positions they hold. JEPQ is basically like a tech stock index. I'm going to get yelled at for saying that on the chat. Someone is not going to be happy with that analysis, but the more and more you look into it, it's pretty much tech stock. It's diversified into other things, but half of it's tech stock. 40% is actually tech, and then the other is consumer goods, and it's like Amazon. So that's tech stocks too, in my humble opinion. But so yeah, leading the way at 8.5% with a massive forward dividend yield. This is a monthly payer, so that's really exciting. AT&T has also kicked it up a notch. Kind of bouncing up and down, but some big movement today. So that's good to see. I'm liking the stability out of AT&T because it had a huge jump, and I was personally sort of afraid that it would be not doing well after that. But it's okay. It's holding its own. Then we got Pepsi. Pepsi, I'm a huge fan of. I the products, they're pretty good, but as a stock, I love Pepsi. We're up on Pepsi even though it's down. JEPI, just talked about it. This is a monthly paying income ETF. It's funny because JEPI and JEPQ have very different prices, but the dividends are very similar. Something interesting to look at. I think just based off that fact, people will start pumping money into JEPQ because why not? It's a good value. But yeah, kind of an interesting thing. This JEPI is a little more stable though. I feel like just because it's older, it's been around, and people on YouTube talk about it. All the fund managers talk about it. But these two funds are actually run by the same guy. So, what do I know? Procter and Gamble. So Procter and Gamble down 3.19%, but we're also up on Procter and Gamble as well. So a great position on that. And then we get into the losers. Realty Income Corporation down a little bit, 3.77%. This is another monthly dividend payer, and right now it is so low priced. This forward dividend yield is looking awesome. If we can get basically 0.5% every month, It's pretty good. Definitely pretty good. So that's pretty exciting. I love to see that. And then SCHD, we were just talking about it. This is like one of those big, broad ETFs, almost like a market fund, kind of like the S&P 500. Um, this is doing surprisingly not that well. So it's down 6.22%, where, the reason I love SCHD is because it outperforms the S&P 500. In both price return, well, price return it's iffy, but in total return, it just blows its doors off. So if we go to, let's say, a 5-year chart, you know, SCHD is up 73%. The S&P 500 is up 66. So both great returns, but I don't think there's any scenario here. It's like 77 to 64 1-year chart, down like 6.97 to down 11.57. It usually is going to outperform it. I feel like in the past month, yeah, it's just getting hit a little hard. So kind of interesting to see it down like in the 6% year to date range, when the S&P is actually up year to date. So, unfortunate timing for that year to date thing, but it should cross over. Again, anything beyond a year, it's better. It's just, maybe 10 year. No, I take that back. I don't think SCHD is 10 years old. Is it? Yeah, I think it is. Maybe. Yeah, it is. I think it's 11 years old. All right. Either way, at least in recent years, it's been blowing its doors off, and the dividend's really nice. So, I'm gonna look at that right now as buying at a value, because it is down. So, like, we're buying it with a coupon. That's how I'm gonna justify it to myself. I hate doing that. No, I don't. I love doing that. We all know that. But so right now I'm just looking at it as I'm buying SCHD for cheap. If it keeps dropping, great. I get a killer thing that performs, you know, like the S&P 500, often a little better, for cheaper. And that leads us to BlackRock. So BlackRock is down 9% year to date. Um, it's a decent position. I still hold that, I'm buying it cheap. I like BlackRock. They own a lot. I hate to go in with the too big to fail mentality, but I think a lot of people do when they are possibly too big to fail. If the sky is falling, I'm sure this will keep dropping, this price point of $648. Because that's just what happens with everything. But I like the bounce back ability of BlackRock. NASDAQ, it's NASDAQ. I don't have much to say about this. We're not buying this every day. It's not really a part of this whole thing. It was just in the portfolio when we started the channel, and it's still there, and it is down 13.5%. And then we have MPW, the saddest public pick I've made. Really the only terribly sad public pick I've made. But I'm still buying it, guys. I have some belief here. It's at $7.46. It's down 30% year to date. Or 35% year to date. In the past month, it's down 30%. It's a tragic story, really. I mean, look at it. It's brutal. The short interest is now up to 20.73%. That is getting to be huge. That's a lot of short interest. And we have some very, very split opinions on whether it's a buy or not. Strong buy, hold, buy, strong buy, sell. There's a lot of unrest, I guess I would say, about this stock. I mean, it's pretty brutal. So, yeah, I'm still buying it. I'm in on it. I like the 15% dividend yield. If they cut that, that's going to be devastating. But I don't know. I still feel good about it. I'm looking at their financials and it looks okay. I'm not saying it's great. Don't get me wrong. Their financials aren't great. They're missing like $200 million or $300 million, whatever the exact number is. It's a lot. But they're also like a $7 or $8 billion company. So their revenues or their rent pays more than double the expenditures of the business, and that's including not getting paid by two of their tenants. So I think they're okay. We'll see. I know people love to also like send something down to the floor so they can buy it, but a lot of short interest here. I mean, again, this 20.73% shorted. Um, woo, that is a lot, especially for something that's like still making money. But anywho, I don't know. What do I know? Again, I'm not a financial advisor. I'm just a guy who has bought some excellent Pokemon cards lately. Uh, but that's a different story. So that's kind of what's going on with the portfolio. I mean, I don't want to get too in depth on this stuff because we did more of a deep dive on Friday, but I am excited to see where we end up at the end of this week. For one thing, it's my birthday on Wednesday, so that'll be kind of fun. So yeah, birthday's coming up, and then Friday we'll check out what's going on with the market, and then next week. Ooh, excuse me. Sorry, as I said, I'm pretty exhausted. Next week have some fun stuff going on, so we'll get some fun shorts and videos for sure. But part of happiness, health, and wealth is you got to do some happy stuff, and we're going to Disney World, so we'll get some fun videos there. Yeah, so I mean, it just kind of sucks. Like I'm so tired lately. I've been having a tough time sleeping. And I mean like not like going to bed at like midnight. I mean going to bed at like 4:30 in the morning, just sitting there, can't go to sleep, and then like waking up at 6. So brutal, really, really tired. Um, like you can only go to so many meetings at 8 o'clock or 8:30 in the morning before you're like just droned. I'm just walking around working, like trying to run a business. Between doing the rental car thing and my day job, I'm just trying to like make money and live. But yeah, so I am looking forward. Tomorrow is my day off. So I'm gonna try to like sleep, try to finish my taxes, get that kind of stuff out of the way. Maybe get a haircut. I'm getting kind of bushy up here. I might do it myself. I'm not sure, but I'm getting a little shaggy up here. Uh, so I don't know. Maybe try to get a haircut. But yeah, I think that it looks to me like the market's stabilizing a little bit. They didn't do the rate hike of half a basis point. They only went up a quarter, so that was good. I think we'll see the market kind of even out for now. Um, people are going to we're going to have an issue with job loss, I think. And I think with the job loss issue, hopefully I'm wrong, but I think that's going to be the driver that fixes inflation. And it's starting with a lot of companies realizing that like the mouse jiggler people all need to go anyway. So, the first big layoffs aren't going to look like big layoffs. They're going to look like, well, yeah, we don't need all these people working from home. And that's already kind of happened, to be honest. Like they've already cut a lot of jobs. So I would watch for, the companies that start cutting jobs for the second time. That's kind of the signal to me that this is like real. Oracle or Facebook or all these, big tech companies. Like I know people who work at Oracle that just do nothing. Like they're like off skiing, like doing useless nothingness, and then they got the mouse jiggler that like pretends that they're working, and like, dude, that's so many people. It's insane. Or like however many people like work from home remotely full time, and then they're like, you know, I'm sure we all know somebody who's like, yeah, just put on Netflix, and then I like, make a spreadsheet, send it in, and then like go to the gym. Like, how many people are like that? So many people are like that. So again, the first wave of layoffs, I think, is actually just companies being realistic and saying, hey, we don't need any of these people. We have ChatGPT now, or whatever else they do. But yeah, so I think that that's pretty crazy. And but the second wave of layoffs, when you see like, Facebook had a big layoff a little bit ago. When they have another layoff, that's bad. So that's what I'm watching for, is just the repeat layoffs. If we see layoffs again from Twitter or from Tesla, like, that's bad, because that they already did their big layoff. They laid off all the useless people. So now, if they lay more people off, that's probably a bad indicator. Um, so yeah, that's what I'm watching for. I'm checking home prices and all that stuff, watching that. But as of right now, seems like things are going to be pretty okay for the near future. More like summertime is when I'm thinking maybe I got to be worried about stuff. But for now, seems okay. And let's just keep buying while it's cheap. I'll leave you with that. I wish everybody happiness, health, and wealth. And with that, roll the outro.